Hey guys, what's going on? Welcome to the video. So the big volatility in the stock market continued this week, and in this video we'll be going over what to expect next from the broad market, as well as what to expect next from Bitcoin, and also go over a couple dip buy setups that are attractive right now. As always, there are timestamps in the description. Now let's go ahead and get into it. So starting out by taking a look at the S&P 500 with the SPY chart. So the past week was very volatile and choppy, though essentially it went nowhere. Dips got bought up where they needed to, but there was also a lack of any upside follow through. There's going to be a good chance for a large directional move soon though. So zooming out to the daily chart, key support in the bottom of the current range is the 50-day moving average, which is currently at 654.67. The 50-day moving average marked the low last week and will continue to be the most important pivot to watch. If the S&P holds above it, it keeps direct upside in play back to highs, or if it fails below it, then that would be the trigger for a larger market pullback. So into next week, key resistances above include 666.5 to 667.34, which a break and hold above there can target 670, then above there can target a move back to the previous all-time high zone at 672.68 to 673 and 673.95. And key supports into next week include 664, 661 to 661.78, 659.11 to 659.5, 657, and then the 50-day moving average, which is most important. Below it would trigger the larger pullback to then target 652.2, 649.5 to 650, 645 to 646.2, and 642 to 642.85. And a big part of the bull case scenario into the end of the year is market seasonality. So historically, September and October are volatile and low performing months, but November is the second best performing month of the year by far, with an average return of 2.3% and a historical 75% chance to close green, and December is historically a bullish month as well. Now seasonality is far from a sure thing, but it would line up well if there was some type of agreement with China or Trump backing down some on tariffs. Now taking a look at Bitcoin, in last week's video we went over the key levels which would act as downside triggers if broken, and the break below 120,000 started the downside move, below 117,000 triggered continuation lower, and it sold down the levels all the way to 105,000 where it finally found support after a slight undercut and reclaim of it. Zooming in, we can see that once it broke below 109,000, which was the previous swing low, it failed to reclaim back above it, then resulting in further downside. After a washout below 105,000, it was able to reclaim back above and has gotten a solid bounce off of it so far after the reclaim. So into next week, 109,000 will be a very important level to watch. A successful reclaim back above it can restart upside, or holding below it keeps further downside in play. Into next week, 105,000 is key support, which needs to hold to keep this bounce attempted play, and a break and hold below 105,000 would trigger the next leg lower to then target the major $100,000 level, and then the trendline backtest, which would line up with about 97.5 to 98,000. Both the trendline backtest and 100,000 would be pretty strong conviction spots for a bounce. On the upside, 109,000 is key resistance, and that needs to reclaim above there to restart upside. A reclaim and hold back above it can target a move back to 112,000, 113,400 to 114,000, and then 117,000 to 117,500 next above there. So overall, I would expect 105,000 and 109,000 to be the biggest pivot levels from here, and whichever one breaks is likely to dictate the next directional move. So now getting into some attractive dip buys in the week and weeks ahead, starting out with Amazon, ticker symbol AMZN. Now this is not a technical trade setup, as for the time being the chart and price action has been pretty ugly, but from a fundamental and story point of view, I think it's one of the best long-term buys in the market on a risk-reward basis. So it's nearing an all-time low earnings multiple at 30.8 times forward earnings, which is pretty much the low not including the move from April this year. It's a company that historically trades much higher than this due to the earnings growth that it projects for in the future. Also, Amazon is being viewed as an AI loser right now, which I believe will get recognized and actually be viewed as an AI winner over time. It reminds me a lot of Google stock from earlier this year, as Google was viewed as a big-time AI loser, and all it took was one story coming out about it, and now it's viewed as an AI winner, and of course made that major upside move in the stock. There's no sugarcoating it though, Amazon stock has been a dog. On Friday it had its first close below the 200-day moving average since May, and it was the worst performing stock by far of the mega caps. So this is pretty textbook relative weakness, and until there's a change of character, there's a good chance it heads lower first before bottoming and moving back up. That change of character could happen at any time though. It could come from some type of news or earnings in a couple weeks. So based on the chart, the next key support levels to watch below are at 209.55, 204.4 to 206, and 200. And in order to reverse back to the upside, it needs a reclaim and hold back above the 216 to 218 key zone, which above there can target 220 to 221, 222.6 to 222.85, and then the 225 to 226.8 zone, which also lines up with the 50-day moving average and would be the larger upside trigger above there. And a more technical trade setup is with Meta stock, ticker symbol META. So Meta has built out a 3-week long consolidation range, which will likely result in a directional move soon, as it historically makes pretty clean moves out of consolidations. So zooming into the chart, it has built out this consolidation above the key supports at 691 and 700, which are the bottom of the range, and roughly the top of the range has been the 721.5 to 725 key zone, which can act as an upside trigger on a break and hold above it. A break and hold above it could then target 735.3, and then the 741.35 to 747.85 key zone, which also lines up with the 50-day moving average, and above there would be the larger upside trigger to open upside back towards the previous all-time highs. The longer that this consolidation builds out, the stronger the move can be once it breaks, and as long as it holds above 691 to 700, which can also be of interest for any dip buy, I would lean bullish on this setup. So that's what I'm watching for in the week ahead. Whether the 50-day moving average holds on the S&P 500 or breaks will be the major tell whether we're going to see a larger pullback for the market or if it's going to just go right back up to highs. Thank you guys for watching, and for anybody interested in joining the private Discord chat, that is the first link down in the description to my personal trade alerts, nightly watch lists, and I answer any questions you guys have in there. Good luck trading the week ahead, and I'll catch you all next time, and peace out.